season, or are you scrambling for your receipts, trying to pull your records together? Is that you? In this episode of Cigars and Taxes, we are discussing the importance of record keeping for tax time. Join us as we uncover all the different ways and tips that we have to present to you for record keeping and making sure that you keep those items close by and organized, maybe not meticulously, but in a way that works for you and works for your accountant.
Hello, and welcome again to an episode of Cigars and Taxes. Thank you for joining us today. Layton Smith here with Stacey Hoffler, Smith. Mm-hmm. We're both IRS enrolled agents, partners of Hoffler Smith Financial Services in Cherry Hill, New Jersey. And we have a wonderful episode for you today. We're going to talk about the importance of record keeping and why you're not doing it. Either way, let's jump on in.
Yeah, so we're talking about keeping your records in a good way so it helps to maximize the deductions that you can take and also helps to minimize your stress level a bit in the process.
Yes.
All right.
Yeah.
We're talking about the importance of record keeping for tax season.
The importance of record keeping for tax season. The funny thing is, we actually need to have a conversation on this one.
Well, I mean, in all honesty, you can't be ready for tax season without doing some record keeping throughout the year. You could wait until whatever, a few weeks before the deadline. If you are
like
just
how the masses do.
really want the most painful experience possible. Oh, this is more just to tell you there's some things that you can do to make it a little easier on yourself and your accountant.
Yes, that would be lovely.
Yes, that would be absolutely lovely. So we're going to jump right in. First off, why does record keeping even matter? Well, I just said those two things just there. But tax compliance, that's first. You want to make sure that we're meeting all of the IRS requirements and making sure that we have things recorded in a way that, if need be, you could be supported. You know, whatever deductions or positions you're taking on your returns, you can support them. So you want to have that, want to have everything lined up reasonably well for that.
Also, let's just say your company did like $3 million last year in gross revenue, and you literally have no records. It's just a horrible place to be.
We have seen that, though.
Yeah, that's what I said. It's a horrible place to be.
We know that from working with clients who have had just that happen.
But it's better now.
It is better.
It was way worse, maybe like, let's say 18, 19 years ago, we had more clients who were still like all cash.
Yes.
And they had nothing but random receipts here and there.
Yes.
But they did not keep all the receipts, did not have a record book, did not have a general ledger.
Weren't using their bank account that much.
Oh, yeah.
It was quite something.
All right. I'm going to stop reminiscing. Let's get to the facts here. Let's do this.
Well, all this is audit protection.
That is an interesting word right there. Audit protection.
Audit protection. So maybe protection is not the best word, but what can we say?
A bit of audit protection. Let's just say audit reassurance that, once you're audited, we at least have the records here so that we can get through.
Yeah.
But it is not protection.
The idea being that if you do get selected for an audit, you want to have your records really lined up well so that you can support whatever positions you're taking on the return.
That's true.
And even if we tell people when we've gone through an audit, a lot of times if you can support 90% of it, even if there's a 10% that you can't, do what you can.
Yes.
And you may get some grace on.
Oh,
you
Lord,
may.
I knew you were about to say that. I knew you were about to say that.
May get some
my
grace,
God.
but it depends on the rest of the audit too. That's just, it's not a given.
Let me tell you something. I think we get way too comfortable on this podcast. Oh God! But have 90% to get some grace on the tip. Here's a big thing.
I said you may. May. This is not a guarantee whatsoever. Please let's be clear on that.
Yes. every line, every deduction that you take, you should have your records that will back up that expenditure.
Yes.
All right. You should not assume there'll be any grace given to you by the IRS. You know, I have $92,000 of my expenses, but I wrote off 95. You're going to lose that other 3 because it ain't there.
It's
all that being said and done.
Likely.
All that being said and done, you know, you can paint a picture of a company that is doing their due diligence, that they're trying to keep their books, keep their records, take the appropriate deductions, and grow. And that's the most important thing, you know, if you were to get pulled into an audit.
Truly.
Showing a true picture of a company that is doing their due diligence and have growth in mind.
Correct.
Oh, my God. So, this podcast starting off stressful already. So, wait a minute now. We didn't even tell everybody. I guess we did. You know, we did say this is the backyard edition already. But, you know, today, sitting here, I'm sorry, not backyard edition, the patio edition. Yes. You know, sitting here, I'm smoking a Perdomo Factory 4 blend. It's a medium, more of a mild to medium stick. Decent. Good smoke. Not a lot of kick to it, but it's if you just want all the way around good smoke, Perdomo, this one's a good one. And what am I drinking today? Water. All water. We're just coming off the weekend. We had a good weekend. And
yes, did some entertaining.
That's it. We're going to slow it up right now.
Wow.
There is no scotch. There is no whiskey. We're just having cigars. And what are you smoking today?
I have a Tabac Especial, and it's mild, you know, and
what flavor is it?
It's a mocha flavor. This is what I usually, this is one of my go-tos.
Okay.
Definitely one of my go-tos.
Show before this, you had Tabac, but it was
a little bit different one.
Yeah, it wasn't mocha. It was something else you had. Then the one before, show before that was Tabac, but it was a different. So you just got the whole range of them.
I like Tabac. And again, infused cigars, I have a soft spot for the coffee, mocha, chocolate flavors. You know, that. Yes.
And what you drinking?
Coffee.
In the hello, gorgeous book.
I am drinking coffee today.
All right.
Yes.
There we go.
Yes.
Cigars with water and coffee.
There you go.
Rock and roll.
There you go.
All right. So we talked about the importance of record keeping. So how about types of records to keep?
Yes.
What you got?
What do I have in terms of types of records? We got income records, expense records, investment records, and property records. Those are your basics right there.
Yeah. So if you don't have an accounting system, and all you got is a bunch of random receipts, you could at least have 3 little bins. You can have 4 bins. Income, expense, investment and property. There we go. Making it easy.
There you go, right?
Making it easy.
Right. Well, so now income records, just to go into details with that, that would be your W-2s, 1099s. If you are self-employed, your records of that income, you may have a ledger, QuickBooks, bank accounts. If you have rental property income, you want to make sure that you have a good accounting of those figures. Investment income, honestly, any sources of income that you have. Some people have, so an investment, we're really talking about interest, dividends.
Sure. Well, if you're into crypto,
yes,
those brokerage statements, the transaction records, which, you know, depending on
day traders out there.
Yeah, the brokerage houses that you use, whether it's IBKR or Ameritrade, whatever it might be, you downloading those CSV files,
right?
You know, that you can hold those as records.
If you have income from a distribution from your retirement account, that's income for you. Actually,
but
most
you're going
of
to receive
them.
a 1099-R.
Yes.
I'm not sure of the need to, you know, they'll send you a payments remittance.
They should.
You could keep that, but you'll receive a 1099-R.
Right.
Now, we do get those times where people did not receive a 1099-R, and the only thing they sent us was that payment remittance.
Right. And the other thing is, what I have seen is, if, let's say it's an early distribution, so they're still working, what have you, and it's not something that they normally get.
Sure.
So if they had this distribution, I don't know, back in February of the year, and now it's February the next year, they're filing, and something comes in the mail and they miss it, it's not, or they have the remittance, like you said, and that gets put in. And then we'll say, hey,
where's the 1099?
We need the 1099 actually, and they'll go back and get it.
That's it.
So just to, just highlighting that. All right. So expense records, some details on that would be receipt, invoices, bank statements, credit card statements, documentation for medical costs, charitable distributions, and any business expenses. And I said business expenses at the end, and just at the end of this list, but we should probably put some emphasis on that. Yes, on the business expenses.
So as far as the record keeping for that, I mean, you had it, the receipts, the invoices and such, the bank statements, credit card statements. If your vendor gives you statements at the end of the year, you hold those too. That's what will be included in that category.
Yes. There's some people that if your vendor doesn't give you a statement, you could request one if it's helpful.
That's true.
For some people, we've seen that they do that.
As long as that particular vendor provides those.
Well, right, if they do. If you're a person that buys a lot online, you can certainly go to your records there if you're having a problem identifying expenses.
Sure.
Ideally, you want to be doing this throughout the year, or at least some periodic way throughout the year. But
so we normally say every 30 days.
Yes.
So, the big thing is, if you're one of the folks, and we're talking about folks who are kind of bad with record keeping in general, and what I mean is,
inconsistent is the word that you want.
Inconsistent. So basically, you go someplace, you buy supplies for a job, you take the receipts, they get thrown in a big ball, and they get thrown in the back of the pickup, and they just stay right there until you're ready to clean the car out. We just really say try to do this every 30 days.
Right.
Actually, we said try to do it weekly, and nobody really kept to that. So we really just tried to go to every 30 days.
Right. And especially if you're self-employed, that can really hurt you if you don't have if you don't have a good handle on the expenses or your income, but you could be losing out.
Yeah, well, especially if all those little crumbled up receipts get kicked out the car, kicked out the truck by mistake.
This is true.
So the big thing is this: try to go back. Once a week is best. Look at the jobs that you had that previous week, the engagements, the clients that you had to see, any receipts. If you're not keeping a general ledger, pull them together, put them in a folder, scan them in, and So we have clients now where in our portal they scan in their receipts and they scan them in by month. But every month they'll have 3-4 drops in there, and that's for each week. The receipts, invoices, other expenditures they might have had.
Right.
Yeah.
So I'm going to move to investment records.
Okay.
If you're okay. So we're looking at sales of investments, dividend statements, capital gains or losses, statements for those. I'll let you expand.
What was the first one?
The first one was purchase and sale records of investments.
So if you buy in some sort of asset and you made that purchase, 9 times out of 10, people keep that. All right. They have a drawer. If they don't keep records, they got a drawer, they got a file cabinet, they have something that they normally put those particular records in. And that would be the same here. You just keep them in that file, but even easier, scan them in.
Yes.
Keep them in a little database, or, like us, if you go to use your accountant's database, with that, upload them to that portal, and they'll always be there.
So investment records, we're not going to beat this up too much, but it's purchase and sale records of investment. Most people do keep track of that as you
Yes.
can.
Yeah, when you purchase an asset or you
Yeah.
purchase a large item, you have a bedroom drawer, a file cabinet.
Right.
We normally keep those particular receipts.
Right.
Best case scenario, or the best option there is still going to be scan the document in.
Yes.
Keep a folder that's on your computer for, new purchases, large purchases, important documents, and then you just keep it in that folder.
Right.
Yes.
And then things like your dividend statements and capital gains, capital losses statements that you get from your brokerage house or banking institution, you're going to get those that come in the mail. Only thing I would say is just make sure you look for them to come in the mail when it's time for tax time. Don't ignore stuff.
Yes. So, it is funny. We do have people who they come in and they will have either they don't go through their mail, so they leave. They miss them that way. Or we have the folks that everything that come in, they don't know what it is. They put it in this big pile and they bring it into us. And,
so it's all or nothing is what we get.
Right. So the front desk are going through like, hey, they're bringing us in here like, credit card advertisements and stuff. So, but still,
that's it. Yeah.
You get the documents, scan them in, use your accountant's portal. If you have a portal like Dropbox or any of those guys where you can create a folder for important tax accounting documents, scan them in, drop them in there.
Right. Yes. Being able to scan and, save your documents so you can have them collected electronically will help save you some time and effort when it's tax time.
That's it.
Property records, documents related to, again, purchase or sale, improvement of your property, and
I would say it's the same thing as the investment records, though.
I think so.
You got to maintain those receipts the same way.
Yes, you will.
That's it.
Most people, I think typically if you end up spending a good amount of money on anything, people tend to keep records of it. All right. Our next segment is on self-employed individuals and small businesses. Record keeping for that group. Special attention for my self-employed individuals. Yes. Okay. So again, income and expense statements for you guys. I'm just going to list them all first.
Okay.
Income and expense statements, mileage logs. Those are really helpful, important. Employee records and business property records. I want to keep all those. I think.
So the second one you said there, mileage log.
Yes.
That's a good one.
It is.
All right. The importance of keeping a mileage log. One of the things there before, we used to have the clients, they'd run around with the little black books and they'd write, all the locations they hit in the day there, or they would have their staff do that. Now we have apps that are readily accessible.
Yes.
There's
multiple ones now.
Of them.
Yes.
Where, you can sign up, you have an app on your phone. It's kind of Big Brother. They kind of will let you know where you went, where you stopped, and it'll keep your records for the day automatically, so you're not even logging. You're just going in to verify the stops that you showed.
Right.
That's a good way to keep the mileage log. What was the second item? The mileage log was the second item.
That was the second item. The first item was income and expenses, and we actually hit that quite a bit before.
Plus, I was going to just make the comment.
Okay.
Saying that you need to keep income and expense statements, and basically, we're talking about folks that have bad record keeping or inconsistent record keeping.
What is with you, man?
So the thought would be, listen, they're not going to have an income statement and a balance sheet. They literally have their records. But all that being said and done, yes, if you have an income statement, actually, it wouldn't be an income statement.
No,
but
you're
they would
keeping
more than likely
track of your income and expenses throughout the year. So maybe it's not a full income statement.
But what they would have is probably a revenue roll. So what everybody keeps, regardless, is they have a good idea of how much their gross revenue is. They know how many jobs, how much they charge, how much they make. That's a revenue roll. So having that revenue roll, which is a listing by month of the jobs and what the gross revenue was from the jobs, perfect. Keep that. I would recommend keeping that in the spreadsheet form. Okay. But if it's easier to just, use any note or Word or document where you're just putting your jobs in because you don't really have an accounting system listed out that way, that'll be great to have a revenue roll. And I will not mess with folks at income statement and balance sheets, but they consistent record keeping anymore. What was that third item?
Employee records. So your payroll records. Yes.
So that's very important.
Absolutely.
Extremely important. Keeping, all of your employees, having them fill out, an employee application, a W-4, your contractors, having them fill out a contractor application, a W-9, having those guys signed and secured in a file somewhere. More than likely, you have employees, you have contractors. If we have inconsistent record keeping, then you're probably using a payroll company. So you would have had to provide them with the employee records and also the W-4s. And that means, good thing, well, even if you're using one of the big boys, ADP, Paychex, one of those guys, you can always go back at the end of the year. They'll have a payroll summary, payroll detail report, a W-4 report, an employee ledger listing. And it's there for you because you're using that service.
Right.
So now, if you're not using the service and you have your spouse doing the payroll at home and you have inconsistent records, we ain't even going to touch that. Let's just assume that that's not happening. Okay?
Look, spouses help a lot. Thank you very much.
Oh, yeah. Especially when we're talking about the spouse that's female. They keep good records. Now, if it's the male spouse that's keeping us inconsistent with the record keeping, and the male spouse is also doing payroll, y'all's in trouble.
Okay. I don't even know if that's the case. But the point being, payroll records you need to keep good track of those. And if you are using a payroll service, they're doing a lot of that work for you, and you can just access it when you need to. If you have individuals that are independent contractors who maybe don't get a check consistently, but they do get some compensation from you, they'll still, we find oftentimes that even if they're using a payroll service, they may just do that piece on their own. True. You want to just keep track of that, and you should always have them have a W-9 completed by them so that you can give them.
Normally that's easy. Even if you have contractors, you're cutting them checks. Okay. Or if you're paying them, with direct deposit, there's a record of that.
There should be.
So the big thing is you just want to keep the records that support the amount you're paying.
I just want to say, I know you said that most of them are paying check. I have seen some individuals who.
Here we go.
Oh, okay.
Go ahead.
You didn't want.
No, you about to talk about that Zelle Cash app.
I was.
Jesus, what?
Because that is alive and well, and some of our newer business owners, or maybe not so new business owners, have been using that. So either way, you should be able to keep track of it.
So you know what? We just mentioned folks that pay people with Zelle and with Cash App. And what else is there?
Venmo.
Yes. Yep. We did have people with PayPal. That stopped primarily. I haven't seen that in a little bit.
Yeah.
The PayPal.
The less of that.
Y'all going to drive me to drinking. I was only going to do water today. Good Lord. But yes, still, if you're paying on with Zelle and Cash App, I think Cash App, we were able to run reports in there to see everybody else's paid for the year. Yeah. Zelle, that was really just a bank statement. There was no reports, I think, for the folks that did Zelle that we could see with that. But the most important thing is you keeping the records of, let's just say they were paid $1,000 for a particular engagement. Just the record showing that contract with them was they got paid that $1,000 for that particular engagement. So you have the record of that contract for that particular job for them. And then we also have that Zelle payment.
Yes.
There you go. There it is. Yes. Life is easy.
Yep.
Now, for all you other folks, for everything you're doing is Zelle and Cash App. Oh my God. When they're receiving all of their revenue through Zelle and Cash App and they're paying people through Zelle, such a mess.
But so there's a whole lot of manual bookkeeping, manual record keeping, bookkeeping that is going to be challenging for you.
Well, at that point, you need an accountant. You need a good accountant. And be honest with you, it's been so many years since I played with somebody books that look like that. We have a lot of wonderful accountants back at their office. I mean, they're just straight senior accountants, old school kind. You give them a Slim Jim and a bottle of scotch. You put them in a small room with bank statements, some ledgers. Just let them go for broke. Stacey's not even speaking on that. Okay, we don't give our people Slim Jims and bottles of scotch and put them in a little room. That was just a joke. It's literally just a joke.
We know that.
All right.
We know that. But in all seriousness, if you are having a difficult time keeping track of your records on a reasonably timely basis, you should consider using a bookkeeper or an accountant throughout the year. It's going to save you a lot of headache, a lot of stress, and potentially save you at tax time and keep you on the straight and narrow. I guess.
We just went through Stacey's therapy session with you for today.
Wow.
Wait, come on. What's the next one?
Jeez. It's the truth.
I know.
Okay. All right. Digital versus paper records. All right.
This is a quick one.
Yeah, it is.
Scan everything in.
Yeah, do digital, please.
There it is.
And so the thing is, that, and to be fair, things have moved to digital I feel like things have been moving that way for a while.
Yes. And
since COVID, whatever kind of gradual movement was happening, everybody got a big shove, to move across that finish line. And so if you're not using it, you really should be using some method in that way. That's my personal feeling.
So just a small story on this, and then we're going to move forward. We close on time.
Mm-hmm.
So one of the funny things is, it was years ago, we had this guy come in. He got picked up for audit. He was an HVAC company.
Okay.
He did like heating and AC stuff. And he had all of these individual invoices from supply houses. And audit he got picked up for was 3 years before. So let's just say this was 17. The audit was for like 14 or something. And he brought in stacks. There was a couple boxes of just these invoices. And we had one of the receptionists and one of the accountants start going through to tag and put these in order. And half of them you couldn't read because of the type of paper that was used. It just wore over time, and you couldn't actually read or see the amounts. And we were looking at that, and we were just like, yeah, none of that's going to work. All right. But luckily, he was able to go back to most of the supply houses and get a new, just one statement for the year for all of it. But that brings into the last point we made about digital versus paper, which is having the digital version. It will not fade. It will not disappear over time. It'll always be there.
We've had a couple of individuals that have had a fire, God forbid, and also flooding.
That's true. And they
lost
their
everything.
Lost their records that way.
Yes.
And then got pulled for a damn audit.
Then got pulled for an audit. Yes. Because that's the only way.
On top of injury.
That's the main reason we found out is because they presented to us for an audit and said, so here's the issue.
We had a fire. Last year. And it was good stuff. That was good stuff.
Yeah.
They weren't bad audits. They were all right.
They were all right. It just meant there was a lot of legwork to...
A ton.
Yeah. To true up that piece. So, retention record. Knowing how long to keep.
Retention records?
Well, retention. I'm sorry. Retention periods.
Retention periods.
Yes.
Okay.
All right. Knowing how long to keep things is, keep your documents is important. So
6 years.
6 years.
I'm kind of old school. I say 7, but normally, if you want to look at it, normally you're supposed to have it for 6 years.
Yeah.
We tell all of our clients 7.
Wait, right. And I think the IRS is generally, I've heard where they've different things. They may say, 3 or 5 years, depending on what it is, and all. I think 6 years is a good
Yeah.
The other thing is they only want it's 6 years to be compliant with the IRS. It's just 6 years of
Well, we kind of mix in different topics there. You know, like how many years can they go back on an audit, you know, without having, you're going through 1 year and having calls going into another year. But all of that being said and done, 7 years is what we tell our clients. Keep the records for 7 years. Now because 90% of our clients, they bring their records in, it gets scanned in, or they're uploading them into their portal, and it just sits there. They're there forever.
They're there forever until, you know, but we tend to, we may be purging our records after a certain period of time, but we usually tell our clients at that point, if you really want to hold on to them, you should probably download them.
But to be honest with you, you know, I think we probably got records for clients that go back to like
a lot
2005.
Yeah.
You know, but we don't guarantee that they're in-house.
No.
All right. They're scanned in, but all of the things that are scanned in and organized, I think from like 2018 on, they're organized really, really well.
Yes.
From that 2017 before, they're like just drop files in there.
Well, you know, technology was different further back. You know, it's gotten better now.
The organization of the databases.
Yeah.
Well, what actually happened is we upgraded internally our system so that there's a much better internal database for retaining these client files.
That's true.
What we did before, it was just like a Dropbox. Well, it's not Dropbox, but just Dropbox. You know, you have this one folder for the client. You just dropped everything in that one folder and then boom. So we get somebody that needs something for like 2009. It's got a mess of a folder you got to go through.
It's a little doing. But I will say it. You know, we were using what was available. You know, technology just has improved in that way.
That's true.
You know,
and like I said, those databases we used before, those are databases we had built, and that was
really early on.
Yeah, it was early on.
But it wasn't much better than what was. It wasn't. What was available to purchase
any better.
Wasn't any better. That was the thing.
So at the time, it was cutting edge. Those databases we had.
Right.
Now we look back at that mess. It's like, Lord, hope nobody.
We were just happy to have the record.
That's it, right?
So, in any case, so I'm going to move on.
Sure.
Tools and software for record keeping. It's our wheelhouse.
Tools and software for record keeping.
Yes. So.
All right.
There's accounting software. Most people have heard of QuickBooks. There's Xero, FreshBooks. There's a few of them out there. For keeping track of your income and expenses, your financial records throughout the year.
No, it's not going to keep your record. So it won't keep copies of the receipts in there.
No, it won't.
But it will. So if you have QuickBooks, you're downloading the transactions. Right. You literally have your bank statement there because you're downloading every transaction, but it's just going to be the transaction. It will not be any details. So it will show that you went to a supply house and you spent $18,000 on any given some particular day, but it won't have any detail of what that $18,000 was.
So there's a role for the accounting software, but it's not going to be everything for you.
That's it.
You know. So, and then you can use tax software. I don't know that counts as a record keeping, but
well, you know, I would recommend against using tax software because basically you have a subscription with a tax software online. And let's say you use one company for 20 and 21, and then you switch to another company, different tax company for 22, 3, and 4, you know, the company you use for 20 and 21, if you're no longer a client, some of these online tax software, if you're not an active client for 2 years, that data is purged.
Right.
So you have a whole other problem right there.
Yeah.
You know, so I wouldn't look at that as a viable option.
Right.
I would still just have your own internal folder on your desktop computer. On your laptop,
absolutely.
and keep your records there.
Right. If you end up using that, always keep a copy of your most recent return, whatever was completed and sent in. You should have that copy. Do not rely on, I can go back to the software and get it. Don't do that.
No.
Don't do that. We talked about, so expense tracking apps. They have a bunch of apps out there like that, and mileage apps.
Sure.
Those are out there. We mentioned mileage apps before.
I really like the mileage apps.
I do too. I don't know about the expense tracking apps.
I have no idea what
seen some
apps
of those
are.
Well, some clients will use different things and they'll send them in as part of their, their documents for us to look at. It's not always categorized well, right. Whatever they have there. And it said,
for a while there was that little scanner thing. I don't know what it was called, but everybody bought that scanner.
Yeah.
And it would scan all the receipts.
Right. And it was supposed to, it was supposed to organize it. And it's like, what is this?
Yeah. I think a better use of that would be people use invoicing programs.
Mm-hmm.
All right. And those have always been helpful for a revenue role.
Right.
That's perfect.
Mm-hmm.
Those other programs, I mean, listen, if you're comfortable with it, you like it, at the end of the year, you can run one PDF that'll give you everything that you scanned in, or it's going to give you the report it made plus all the documents you scanned in one PDF, and you can just save that and keep it. Perfect.
Mm-hmm. Right.
There you go.
I think
I won't talk bad about that.
Well, I mean, again, everything has its role. I would not want anybody deciding I'm going to use the expense tracking kind of app and that's going to replace a bookkeeper. That's not what's going to happen. Okay, I just want to be super clear about that.
So I know we're running out of time. We got to wrap this up, but we have had a couple of folks that they were more consultants and they came in very tech savvy. And they literally had one program they used for invoicing that was mobile based. One program they had that tracked expenses that was mobile based. And then they also had the mileage log app going there too. And then the problem was everything was in the app. And it was like, okay, well,
can you print it out for us?
Yeah.
And it's like there's like a deer in headlights. Well, how do I do that? I can't get it out, And it's like, all right, well, you can share, right? Yeah, all right, well, hit share, see how you can send it to us. Maybe it'll go to us an email, and then maybe it's a PDF. Yes.
Oh my God.
It was, All right, so we're going to talk about some examples. Examples and stories are fun. Just they're always interesting. So you had one.
Yeah. Well, first, just a word of advice. Don't use like 9 different programs. Just find one. Like I just said, the best thing that we can do, we can advise is have one app that you use for all of the revenue, for all of your invoicing, tracking those expenses, and also your records, scanning in those documents.
It's good stuff.
That's it. That's
good
it.
Stuff.
You don't want to be like some of our other clients. We've had some. Now, we're going back in history a little bit, but, oh, my God, we had some cats walk in the office, and they come in with like 7, 8 boxes of documents. Now, also, they had audits.
Right.
Think about one in particular. You went to go see a tax attorney, and he took 7, 8 boxes to that person, that attorney, who, gotta let them watch this episode, they'll love this. And then that attorney told him, you need to go find an accountant. Okay.
Well, that's it. And I think if I remember correctly, the IRS, prior to them presenting to us, the IRS had seen that and said, you didn't give us any records.
I'm not sure if that happened exactly.
Something like that. They basically,
there was an office visit. They looked there and they told them that they needed to organize those documents.
Right. Yeah. Or they would count it as not complying with supplying the documents.
So to the attorney, the tax attorney, and the tax attorney pretty much said, we could take this audit, but we're not going through that mess. Need to find an accountant to go through that mess. Line up all those documents, line up all those receipts in the same buckets that we have for the tax return, and then, we'll go from there.
Right.
Yeah.
So, and to be honest, even for individuals who are not involved in an audit right now, I have certainly had clients attempt to come in for tax time with boxes or once upon a time used to be the trash bag.
Oh my God.
Yeah, it was terrible.
Oh, let's just end it here. Yes, we'll tell them stories later.
Well, no, okay.
Oh, go ahead.
All I
Trash
am
bag
saying,
stories.
all I'm saying is your accountants, your tax professional is not going to do that. Not going to go through all of those steps.
That's not true.
Oh.
You still got these folks
Oh, that's true.
doing that. You get the trash bags. We got to get some of those old pictures from like 15, 18 years ago where we got people with black trash bags.
Well, we used to do it.
We did.
We
They
did.
would walk in the office and put these two huge black trash bags on the desk. Then we'd be sitting there like, ooh, okay. You just paid for the first vacation this year. Thank you kindly.
We did charge for it. That's the thing.
Yes.
And usually they would, if we give them some pointers about it, they would adjust, you know.
Well,
So-
either way, listen, this has been a wonderful episode. I think we covered a lot.
And let me just say then, I know you said that that's not true. They will do it. They should not go in expecting, assuming that should happen, because it's very possible that they will decline to do it, or you have to charge, or they'll be charged a fee for it, and you just need to be prepared for that.
Let me tell you something. Accountants are interesting folks.
They like a challenge.
They love a challenge, and most accountants never seen a client they didn't love, even when they should not have. Okay? So the same way, 20 years ago, people were walking our office with trash bags. There is offices right now that are being walked into with trash bags. We just have matured a little bit so that we don't see that anymore. But that is happening today. I know that's happening today.
Okay, so that's fair. There's whatever work there is to be done, no matter what it is. I'm sure there's somebody that will do it, but I think that it's all right. Fine, we will agree to disagree.
We're not disagreeing. Okay.
I think people are, generally speaking, there's a lot of people that are using less paper now, generally.
That's true.
And so there's a shift away from that. So certainly people still do it. I still use paper for a lot of the stuff that we do, a lot of the work that we do. But all that to say, try to keep track of your records and do some record keeping on your own, categorize it, and keep files and documents kind of in a good place and as organized as you can.
Okay. And with that, guys, it has been a wonderful episode. We thank you again for joining us for this particular episode of record keeping and the importance of record keeping.
For tax time, yes.
For tax time, yes. If you enjoyed this episode, please, hit the subscribe button, like the episode, send us a note on any questions you might have to info@cigarsandtaxes.com.
Yep.
And with that, guys, we will see you next week.
Yes, until next time. And as always, make sure that you're checking with your tax professional about anything that you've heard on this program that you have a question about, just to make sure that this is all for advice and informational purposes. Always check with your tax accountant for how these items apply to your situation.
Yes.
Okay.
Definitely.
All right.
All right.